Good morning. This is Japanese Economic Review Channel. Yesterday, July 8th, the Tokyo market faced intense volatility. We will analyze the data-driven factors behind the Nikkei 225's sharp decline. This report synthesizes public exchange statistics and global macro indicators to provide a comprehensive look at the forces that shaped yesterday's trading session. Yesterday's 1,437-point plunge was a, quote, macro convergence. Three vectors aligned: global tech weakness triggered by a sell-the-fact reaction to earnings, a geopolitical shock in the Strait of Hormuz, and domestic technical pressure. These forces combined to push the Nikkei 225 below the critical 67,000 threshold for the first time in nearly a month. The final statistics from yesterday are stark. The Nikkei closed at 66,819.05, while the Topix fell to 4,006. In the US, the Nasdaq dropped over 302 points. Currency markets saw a slight move toward the yen at 162.25 per dollar. These figures confirm a global shift toward risk-off sentiment as investors reacted to escalating external pressures. Two external shocks dominated yesterday. First, the semiconductor paradox. Samsung reported record profits, yet its shares plummeted, sparking a sell-off in AI stocks. Second, reports of an attack in the Strait of Hormuz caused crude oil to spike nearly 6%. This dual impact of tech contraction and energy inflation radically altered the cross-sector market sentiment. Domestically, yesterday saw a bull trap in the morning as AI stocks briefly recovered. However, the session was overwhelmed by mechanical ETF selling to fund dividend distributions, totaling an estimated 1.2 trillion Japanese yen. With 960 declining stocks against 564 advancing, the sheer volume of technical liquidation left the market without organic support. Sector data shows a flight to safety. 23 sectors fell, led by precision instruments and electronics like Nikon and Keyence. Conversely, 10 sectors advanced. Mining and marine transport, specifically INPEX and NYK Line, saw strong gains as direct beneficiaries of the oil spike. This rotation highlights how investors used commodity-linked stocks to hedge against tech volatility. Finally, the Growth 250 index followed the broader market lower yesterday. Space tech firms like Astroscale faced pressure, tracking declines in U.S. space stocks. However, we saw resilience in select names. The recent IPO Go moved upward despite the headwinds. Yesterday's session proved that while technicals dominate, specific growth stories still attract discerning capital. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.